Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold chart, the gold versus US dollar. And as you can see here on the final session of the week, we have broken down towards the downside and we're now trading below the 200-day EMA. So this is not very good at all for the gold bulls. It's going to be very important to see where the gold markets close after today's session. There's still roughly 4 hours left, or 3.5 hours left of the US session. So there's plenty of time for gold to recover here. We're currently trading at 1785. 200-day EMA is currently at $1,800 levels. That's a large psychological number. So it's very important that we trade back above 1800. If we do get a daily close back above 1800, that would be extremely bullish, because then we would have formed a hammer candlestick. So this could be what they call a flush out, and that's where the big money managed firms, the hedge funds, the banks try and trigger retail traders stop losses. So a lot of retail traders would have had buy positions at 1800, as I do, with stop losses at 1780, 1790, and these stop losses are just way too tight, and that's why I put my stop loss down at 1750. If I think it was about on Wednesday, I said to buy at $1,800 level, targeting 1900 with a stop loss at 1750, which gave a 2-to-1 win-loss ratio. So it's very important to not put tight stop losses, especially when you're trading around the 200-day EMA, because the big money managed firms will try and trigger your stop losses. So once again, it's very important to see where this market closes on a daily basis. One good thing for the bulls, though, is that we have now approached the 30 level on the RSI. This now tells us that in the short term, we are considered to be oversold. So I still do expect a bounce here. Although we're trading below the 200-day EMA, I wouldn't typically sell this. Don't jump in selling it thinking it's going to go down to 1700. So going into next week's trading session, I'm looking first of all to see where, of course, gold shuts this evening. But if we do get a daily close up near the $1,800 level or above, I would then be adding to my buy position, because we would have just formed a positive daily candlestick, trading up towards 1900. If we do get a daily close around this 1785, and I'm going to wait Monday to see whether we do continue towards the downside, because don't forget, liquidity has been very low in today's trading session, because yesterday was Thanksgiving, and many traders would have taken today off to have a long weekend. So this could just be the case of there being low liquidity. So that's how I'm playing this market going into next week. If we get that daily close above 1800, I'm a buyer. Looking at the bigger picture from a fundamental perspective, we still do look very good here in the gold markets, because I'm expecting that second stimulus deal. Technically, we are currently under pressure, but that can easily turn around. So I'm going to be sitting on the sidelines. I still have my buy position open, of course, with a stop loss at 1750, but I'm going to keep it open going into Monday. And I'm going to analyze where the market shut this evening. But I am a buyer still, with my take profit up at 1900. I'm still a buyer.